Trading and investing is not about how much you can make. No, common misconception. It is actually about how much you can keep, which is the topic of today's video as we go over the top 5 ways to know when to de-risk on Bitcoin and, by extension, the cryptocurrency market. Perhaps even call a macro high there too. With that said, welcome back to EllioTrades channel. I'm your host Krown again today with some good old TA. And we got a fun one as I make sure all my tabs are closed right now. There we go. All right, nice and focused down because this is going to be a good video. Anyways, a skill video today. And I want to give you some keys here so that you're not reliant on me or anyone else because, well, realistically, at the end of the day, trading and investing, you need to be your own authority. And while it's good to come and consult with others like colleagues, still, you want to be your own authority and own boss. As I turn down my damn phone right there. Sorry about that. Really annoying. Apologies, but I am actually waiting for a majorly important call, putting together the computer. Anyways, let's get into it right now. Let's start off with the most important thing, the one thing that matters above everything else. And anytime that this happens, it is always a good idea to consider de-risking. And you could potentially see a macro reversal based off of this. However, it is not always, but it's usually a damn good idea, or it's always a good idea. It's always a good damn idea to de-risk when this happens. And what is that? Very simple, very powerful, and it is the daily trend. All right, so let's make this nice and simple right here. Let's go back to the beautiful moments of the middle of 2021, of course. And I want to first define how trend is essentially notified. And that is by defining swing highs and swing lows. And we're essentially just looking for these very obvious areas where Bitcoin or whatever underlying asset may be, the very obvious stop and reverse point. Right here would be an example of one. A good rule of thumb is that if it is not obvious, it is unlikely a swing high or swing low. A lot of people get confused, and myself included when I first started, thinking that every little zig and zag here is a swing high or swing low. Not. So we're going to mark off the first couple here to just give you a general idea, and then I'll explain why and why these are not. So I'll do here as well. And I think these ones are rather, obvious, as you do have a stop and reverse point, meaning that we're rallying up, 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 and then we reverse down and put in a higher low right here. Now, why is this not a swing high or swing low right here, even though it does have that peak in value? And these guys over here as well. Well, first things first, a good notification that they are not is that the high, in this case, would be a little bit too close to that swing low. You want some space. And as you can see right here, there's some good space between this swing low and this swing high. You need to give it some time to trend. In fact, for reference, on a daily, this swing low right here was on the 28th of February. This swing high over here was on the 13th of March. That's 2 weeks apart. So give it some time. It's very unlikely to happen very fast like this. That is a good signal that it is not. Okay, then I'll let you pick what you think the next swing low is, and I'll give you a second there, and then I will give you the answer now. That's your next swing low. Again, very obvious. It should be exactly that. And as soon as that's confirmed, okay, we still have our uptrend, right? We have highs, or we have a high right here. We have a higher high right here. We have a higher low right here. What's the bias? It's all good. Stay in the market. And where do we get our next high? Right here. Okay, excellent. That's a higher high. In fact, at that time, it was the all-time high. Well, at that point, and this is the key component of what I'm going to say about the daily trend, you see something incredibly powerful, and it's this. This move down right here. The second that it takes out this swing low, and that it goes below there and closes below there, no longer have an uptrend. Now, do we have a downtrend just yet? No, because we need both a lower low and a lower high. But the second that you get this right here, should be major warning signals, major red flags flashing all around you saying, hey, no longer the time to be in a risk-on environment. We are now on what's called lower high watch. And what happens soon after that? Well, back up, put in a swing high right here. What happens after the swing high? Well, we have a couple things going on. We had first a lower low. Now we have a lower high. We have a confirmed reversal. No longer an uptrend. And if you are long, trend is no longer your friend. And what happens after this? Boom, humongous move down. Now, from top to bottom, 44.25% move. More importantly, when was this actually confirmed as a local high? Well, when it comes back down right around here, that's when it's actually very obvious. So still, even from there, 40.5%. Very important to understand. Now, here's the thing. The daily trend does not represent the macro, but it almost always is going to represent a pretty impressive and powerful move. So that is why I thought it was pertinent to this discussion, even though technically I want to focus on when to judge when the macro highs are in. And to do that, we would still use trend. However, we would use a different time frame. And in this case, we'd go to the weekly. And as you can see right here, in that every candlestick or line is going to be 1 week. This is no longer, these are no longer all highs and lows right here. It's actually just one major high. Easy. And where's your next low? It's right here. It's that simple. It's actually that simple. And so you can see that we actually did print a lower low for a second right there, just by a smidgen. This was a bear trap actually. And how do you know that? Because after that, it's just, well, we print another higher low right here and then up. So obviously a trap and continuation. It is a good time to be on guard right here, to be fair. Anyways, I want to bring you to the last macro reversal that we did see, which was way back on over here, right? We have a high. Okay, there's your high. All right, where's your next low? Next low is right here. Where's our next lower high? Right here. High, low, lower high. What happens after we take out this prior low? Have a lower low. It is a confirmed reversal. And, well, the rest is history. For the next year and a half, straight down. Not necessarily straight down, but takes it. And we could do the same thing for 2014 as well. What do we have over here? We have a high. We have a low. Where's our next lower high? Right there. Once we take out that low, and down we go even more over time. So again, very important to understand this. And the weekly does specifically speak towards the macro. By the way, both on the opposite side, an uptrend, both a higher high and a higher low after a downtrend, typically good times to potentially consider putting risk on. Not that this is financial advice. Anyways, let's just do a little thought experiment right now. What are we looking at on a daily right here? Well, we had a high right here. We had a low right here. Okay, where's our next high or low? No, no, yes. Where's the next low? Boom. What do we have right now? High, low, higher, low. Beautiful. It's an uptrend. Okay, so that is the first and most important thing to be aware of. This next one is pretty damn good too. Now we're speaking towards the macro here. All these vertical lines have one thing in common. They all judge, well, technically not macro highs, because this is not a macro high and this is not a macro high, but these are humongous pullbacks, even though this one specifically does not look that bad. It is certainly very bad, 75% down actually. Anyways, my point is that when you see this, again, big warning flags should be flashing around. Time to consider taking profits. Do not be greedy. Do not be putting on risk in these areas. This, the weekly RSI. So the RSI specifically on the weekly with a 14 period, which is, probably have that anyways. I marked off this green horizontal as the precipice of which all of those highs have at least gotten to. The lowest one was actually December 2017 at just a 90 read. So all of these major highs have gotten to at least 90. Anytime you're above weekly RSI on a 90, or sorry, anytime you're above 90 on a weekly RSI, dyslexia, not time to be putting risk on. And what do you know? You got a 66 for what it's worth. All right, this next one's a little bit of a bonus and actually goes both ways, as it is direction neutral, and that is volatility. Volatility, one of my favorite indicators right here, this being the BBWP. And it is just a volatility indicator that is essentially put into a statistical format called a percentile. So how do you understand this? Well, volatility being the dispersion of returns, you can likely intuitively understand this, that when volatility is extremely high, statistically speaking, that the dispersion of returns is rather large, meaning that moves are very violent and very, well, movie. They're moving a lot, what I'm trying to say. So when you get those sort of situations, well, implied within the name, parabolic blow off top, or just a dump, like a massive dump, right? And so when do those things typically happen? On major highs, and actually a lot of the time on major lows too. So this is actually going for both ways right here. Very important to understand, very powerful, very simple. Both of these indicators, the BBWP and the RSI, freely on TradingView, and this is specifically for the weekly time frame. Okay, let's move on to the last couple here, of which we'll start off with the fundamental one. I already got it up here. That's going to be the Bitcoin stock to flow rainbow indicator. Again, just free on TradingView here. I'm sure you've heard of Plan B stock to flow indicator. And well, anytime we get into the green zone, it actually has started to mark the end of that cycle, to be fair. I would say there is a good counterpoint to this. The counterpoint is that we don't really have too many iterations here, only two really good ones that have made sense. Three times makes a trend, and we might be doing that now, but but as long as the daily and especially the weekly trends are to the upside, not entertaining any possibility of a macro high. What's the next one that's a little bit more well defined? And that would be the Bitcoin log curves zones. And here it is right here. In fact, I shouldn't even include the stock to flow indicator. We're just going to make it 4. How about that? This one I think is a lot better and well tested. And what do we see? Bitcoin has never put in a macro high. So specifically a macro high, not a major high, but a macro high, without at least getting to the red zone. As you can see right here in the 2011 blow off top. As you can see right here in the 2013 blow off top. And again, more recently in the 2017, 2018 blow off top. As of right now, just for what it's worth, we are actually still within the yellow zone, and the top of the red zone would be just under $140,000. That is, however, it is also worth noting that number will increase with each and every passing week that we do not hit that area. So there it is. Those are the 4, but realistically 4 ways to judge major highs, when to take essentially profit, take some risk off the table, realize some money, and keep it, more importantly. And also we'll do another video on like when to start to re-enter as well, perhaps at some point. But again, a very very simplistic stuff right here. Anytime that we are judging these things, it should be very tangible, very obvious. And at the end of the day, you are your own boss, so you get to make your own decisions. Just understand what these meant within the history of Bitcoin. And for right now, we don't necessarily have that threats on the macro just yet. Doesn't mean that it can't happen. It certainly can. And with that said, I think it's a good time for me to let you know that I have my own channel. It's called Krown Crypto. There is a link in the description below. And it's a lot more technical, and we go at 1,000,000 miles per hour, but it's fun if you're into that kind of stuff. If not, all good. Just thought I'd offer it up right there. And then, of course, we also have the Bybit link as well. If you are an experienced trader, specifically, if you are not, if you have no experience, no success, no nothing with not just leverage trading, but regular trading, do not use it. Do not use it, at least for now. You should do, if you are interested and compelled to, is to go and get a testnet account on any major exchange. They pretty much all have them, and try out some strategies that you have been thinking about or that you can assess from other people's videos, maybe this video perhaps, or some of my own videos, of which I have several on sorts of different strategies on my channel, and test them out. But do not commit finances to it. Or you could just paper trade it. You don't even need a testnet account. And once you get some success doing that, then maybe consider jumping in. However, again, there's no rush, and these things take a long time. I can tell you for myself, it took years before I could realistically trade consistently. And I had some tutelage from like some of the best traders in the world. I actually used to be on the floor of New York Stock Exchange ARC as a market maker authorized trader. So I was surrounded by some of the best. And even then, I definitely had a lot of problems at the beginning. So with that said, I'll sign off now. Take care, and until next time.